Welcome to Business with Lua, the show where we break down complex business concepts into actionable insights. Today, we're going to explore one of the most critical components of modern economies: central banks and interest rates. As a business owner or entrepreneur, understanding how central banks and interest rates work is crucial for making informed decisions about your investments, borrowing, and overall business strategy. So, let's dive in and explore what central banks and interest rates are all about. Central banks are the institutions responsible for managing a country's monetary policy, including setting interest rates. In straightforward terms, interest rates are the cost of borrowing money. When you take out a loan or credit card, you're essentially paying a fee to use someone else's money. Central banks adjust interest rates to control inflation, stimulate economic growth, and maintain financial stability. The origin of central banks dates back to the 17th century, with the establishment of the Bank of England in 1694. Over time, other countries followed suit, creating their own central banks to manage their monetary systems. Today, central banks play a vital role in shaping the global economy. One key concept is the monetary policy transmission mechanism, which explains how changes in interest rates affect the broader economy. When central banks lower interest rates, it becomes cheaper for businesses and individuals to borrow money, leading to increased spending and investment. Conversely, when interest rates rise, borrowing becomes more expensive and economic activity may slow down. Influential thinkers like Milton Friedman and John Maynard Keynes have shaped our understanding of monetary policy and its impact on the economy. Their ideas continue to influence central bank decisions and business strategies today. Let's look at some real-world examples that demonstrate central banks and interest rates in action. During the 2008 financial crisis, the U.S. Federal Reserve, led by Chairman Ben Bernanke, implemented quantitative easing, a monetary policy tool that involved buying government bonds to inject liquidity into the economy. This move helped stabilize financial markets and stimulate economic recovery. Another example is the European Central Bank's decision to implement negative interest rates in 2014. The ECB charged banks a fee for holding excess reserves, encouraging them to lend more money to businesses and individuals. While this policy had mixed results, it highlights the creative measures central banks can take to stimulate economic growth. So, how can you apply your understanding of central banks and interest rates to your business or career? Here are some practical tips. 1. Keep an eye on changes in interest rates, as they can impact your borrowing costs, investment returns, and overall business strategy. 2. Consider refinancing your loans or adjusting your debt structure when interest rates change. 3. Spread your investments across different asset classes to minimize the impact of interest rate changes on your portfolio. 4. Follow reliable financial news sources and central bank announcements to stay ahead of the curve. However, there are also potential risks and challenges associated with monetary policy. For instance, excessive money printing can lead to inflation, while overly tight monetary policy can slow down economic growth. Additionally, the impact of central bank decisions can vary across different industries and sectors. For example, a rise in interest rates might be beneficial for banks, as they can charge higher interest rates on loans, but it could be detrimental to industries like construction or manufacturing, which rely heavily on borrowing. To navigate these complex waters effectively, consider seeking advice from financial advisors who can provide personalized guidance based on your specific situation. You can also use tools and resources like financial news apps, economic calendars, and business planning software to stay informed and make data-driven decisions. In conclusion, central banks and interest rates play a vital role in shaping the global economy. By understanding how these institutions work and the principles behind monetary policy, you can make more informed decisions about your investments, borrowing, and overall business strategy. Like, share and subscribe, and remember, every great business starts with action. Make your next move count.